Hey everybody, this is Dave. It's Friday, 11/27, the day after U.S. Thanksgiving, so not much trading action happening today. Today we're just doing the weekly update of the focus group. Today, this report is the commodities focus group. So basically, we can see commodities information down here in the graphic. The obviously the commodities is the weakest area by far across the board. So for anybody who's sort of medium to longer term, the outlook really hasn't changed. You can see here um, as we look at our graphic, we have an outright sell rating. So it doesn't necessarily mean that in the short term money can't be made, but basically those with a 3 to 6 month horizon or possibly longer, this is just not the time that you want to look into something like this because the risk reward profile is just not really that good. Um, you know, but the 1 to 3 month period is starting to look potentially like there may be some bounce. We kind of have so far have had a bit of a false start here down in the this particular area of the longer term timing model. We've just actually had a crossover, so that crossover is not necessarily that good for the next 2 to 3 months as well. So it's just kind of a bigger picture view of still what's going on. China continues to weaken, and so if China's not ramping up their development for commodities, this is just going to be reflective of something that's just going to continue to drag down. So from a 1 to 3 week outlook, we're we're timely. Those people who want to bottom fish here, again, this is kind of more of a high risk trade. I don't see a ton of upside in here. What I see is maybe something in the neighborhood of 7 to 15% in an absolute range from top to bottom. So if you're looking for a short-term trade, that might be something to capture. Again, I don't know how this is going to perform if you get some weakness in the equity market, but at this juncture, we haven't even had any kind of crossover. I mean, since July, where right here, where we're putting our crosser right here, you can see that this area here we've dropped below the major dividing line. So as a long position, and basically how that works is that if you're long and you're below this is a pretty solid short signal. It's made not made tons of money, certainly not been as successful as this particular short signal back in the September period of 2014. But short term, we're at the bottom of the range. As I said, I think that there's probably a bounce coming. What could be interesting about this is that if in fact we do see a pop and the index can kind of revert into a bit of a short, and that's not likely going to happen until, as I said, probably something in the neighborhood of about 10 to 12% from this level rally. But if we do get that, then I'm expecting that we'll probably see it, the short be successful into a long and possibly the long as we go into a bit of a sideways trend. The only reason I suggest that is that the selling behavior is nowhere near as weak as it's been over the past, in 2014. So anyway, it's the just in summary, long-term picture hasn't changed a whole lot. Just not an attractive place to put money at this point. Short-term, possible pop coming for aggressive traders.